Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings so you don't have to. And today we're looking at a proxy statement from SoundHound AI, and while most of the filing is very normal, there's some interesting parts, but most notably that the filing itself lead to a lawsuit, which is of course never a good sign. So what's the quick version? SoundHound is asking its shareholders to vote on several important changes to its corporate rules, including things like increasing the number of available shares, changing director liabilities, and making it easier to change the rules in the future. But buried in all that paperwork is an amendment to its charter around corporate opportunities that was a direct response to a lawsuit filed against them. Let's dig in, shall we? This document is a proxy statement, which means it's information given to shareholders so they can make informed decisions about how to vote on company matters. This proxy statement is being issued for the 2025 annual meeting of stockholders, which will be held virtually in May. SoundHound is inviting stockholders to their annual meeting to vote on several proposals. These proposals include electing directors, ratifying the appointment of their accounting firm, and a few amendments to their corporate charter, which is like their rule book. One proposal is to provide officer exculpation, basically protecting officers from certain liabilities. There are also proposals to change voting requirements for future amendments and to remove a section about stockholder ratification of contracts. The board of directors is urging shareholders to vote in favor of all the proposals listed. They believe these changes are in the best interest of the company. First up is the election of directors. Shareholders are being asked to elect 5 people to the board for a 1-year term. These nominees include Kevan Mahaja, who is also the CEO, James Home, Larry Marcus, Diana Sroka, and Eric Ball. Kevan Mahaja has been the CEO since 2022 and was also the CEO of Legacy SoundHound since 2005. He's considered well qualified due to his deep knowledge of the company's business and technologies. James Home is the Chief Product Officer, another co-founder of SoundHound, and has been with the company since 2006. He leads product development and is also considered well qualified because of his knowledge of the business and technologies. Larry Marcus is a managing director at Marcy Venture Partners and has been on SoundHound's board since 2009. His venture capital and finance experience makes him well suited for the role. Diana Sroka has held various leadership roles at HP, including Chief of Staff to the CEO. She has a strong background in accounting, financial management, and internal controls. Eric Ball has extensive experience in finance, mergers and acquisitions, and investing, particularly in the technology industry. He also has experience serving on other company boards. The next item is about the company's independent auditor. The board is asking shareholders to ratify the appointment of PricewaterhouseCoopers LP as the company's auditor for the fiscal year ending December 31, 2025. A quick look at the audit fees. For 2024, PricewaterhouseCoopers billed almost $5 million for audit fees. That's a significant jump from the $1.6 million in 2023. A company switching auditors or having a huge increase in billables can raise some eyebrows. Now, onto a key proposal, increasing the number of authorized shares of Class A common stock. SoundHound wants to increase the number from 455 million to 755 million. The company says this increase will give them greater flexibility for future business needs, such as raising capital, providing employee incentives, or making acquisitions. Essentially, it gives them more options down the road. However, increasing authorized shares can dilute the value of existing shares. Here's where things get interesting. This proposal is tied to a lawsuit. SoundHound is proposing an amendment to limit the waiver of corporate opportunities. Under Delaware law, directors and officers have a duty of loyalty to the corporation. This includes not taking business opportunities that belong to the company for themselves. It is called the Doctrine of Corporate Opportunity. A stockholder, Jonathan Jones, sued SoundHound, claiming that their existing corporate opportunity waiver was too broad and violated Delaware law. To avoid the cost and distraction of the lawsuit, SoundHound is proposing this amendment to address the concerns. This proposed amendment limits the waiver to only independent directors and only for specific business opportunities related to conversational intelligence and voice technology. It's essentially narrowing the scope of what directors can pursue on their own without it being considered a conflict of interest. Another amendment, this one is about officer exculpation. SoundHound wants to extend protection to certain officers, eliminating their monetary liability for certain breaches of their duty of care. The goal is to attract and retain qualified officers who might be deterred by the risk of personal liability. However, it also means officers have less personal risk when making decisions, which might give certain officers more incentive to be bold or more recklessly mismanage it. This proposal deals with voting requirements for future changes to the company's charter, specifically regarding the number of authorized shares and stock splits. SoundHound wants to adjust the voting requirements to align with recent changes in Delaware law. This change would make it easier for the company to make these kinds of changes in the future, as it would require a lower threshold of shareholder approval. This could streamline certain corporate actions. The last proposal is about removing a section in the charter that allows directors to submit contracts or acts for stockholder ratification. SoundHound is proposing this change to reduce the likelihood of future claims, and because they believe this particular right is unnecessary for the company's governance. Time for who owns the company. Keyvan Mohajer, the CEO, owns a large chunk of Class B common stock, giving him significant voting power. Syed Majid Amani is listed as the largest single owner. It seems to include 16,583,756 shares of Class B stocks. Outside of management, the Vanguard Group and BlackRock Inc. are major shareholders. The Vanguard Group owns 32,000 and 31,662 shares of Class A common stock, representing about 4.6% of the total voting power. BlackRock Inc. owns 23,276,075 shares of Class A common stock, which is about 3.4% of the total voting power. Let's talk about how much the top dogs are making. In 2024, CEO Keyvan Mohajer's salary was around $484,000, plus a bonus of $242,000, and stock awards worth almost $7 million. The CFO, Nitesh Sharon, had a salary of around 380 others. CFO Nitesh Sharon had a salary of around 380 others, and you can see the total compensation for those two and other top executives ranged from about 230s, comes from stock awards rather than cash. Here is a good one. This section describes what happens to the executives' pay if they are terminated or if there's a change in control of the company. Keyvan Mohajer, the CEO, would get over $500,000 in salary continuation and acceleration of unvested stock units, which brings his total payout to over $50 million. The compensation actually paid to the CEO in 2024 was about 54 times $7 million. This amount includes adjustments to the standard compensation calculations, primarily reflecting changes in the value of equity awards, which means it's a non-cash number. It doesn't mean the guy took home 54M in cash. An initial fixed investment shows how the stock would perform over time, and from it we can see that it's at about $2.65 based on total shareholder return, compared to peers which are around $25. From the revenue in thousands ended 2024 at 84,693, compared to 45,873 in 2023, which would mean the revenue nearly doubled in 1 year. The important metrics are revenue, adjusted EBITDA, and annual recurring revenue. These are key to determining executive compensation. What's also important is chart 2 in the years when the company had very negative net income. That was precisely the same time, 2022, when compensation was sky high. So what's my take? SoundHound is at a crossroads. The company does seem to be growing and is heading in the right direction. Revenue nearly doubled and their stock performs much better than their peers. However, their executives get paid. They get paid really well, especially in years when they weren't profitable or even when losing money. Also, being slapped with a lawsuit over corporate governance isn't exactly a badge of honor, but they are taking steps to fix it. Also, the enormous jump in audit fees from PwC and what they discovered all requires further scrutiny. So while there are positive signs, there are also red flags that investors should keep a close eye on. Thanks for watching. If you enjoyed, please subscribe, like and comment.